Bonjour à tous.
Good morning, all, and welcome to the AXA Group's annual result presentations 2018 with Michael Buberl, Gérald Arlin, and financial CFO, and Jacques de Peretti, AXA France. The MCC members are in the room this morning to be able to answer your questions later on. And you can ask, of course, questions in the room, but also ask questions remotely. The floor to Michael Buberl. Good morning, Julien. Welcome all. We are here today to share with you the 2018 annual results. Last year, when we met in this very same room, I told you that 2017 was the year of structuring changes. And this year, I can tell you that the year 2018 was profoundly marked by a decisive approach to our markets. We have seen many different changes, many announcements. Here, the creation of AXA XL, also listing our American activities in life and savings. And I here, of course, am talking about the residual taking on board of Tianping, and a year, therefore, of the implementation of our strategy that points to our determination and our capacity to change AXA, to transform AXA, to turn it into one that is much more focused on insurance risks and much more focused as well on stronger ties with our clients that we would like to increase in number. So we have here reached an operating result that is quite good in view of the fact that there's a good balance between growth and profitability. You have seen that our revenues, gross revenues, have grown by 4%, and this 4% level is focused on our target segments in health and protection, and also commercial risks. If we look at the operational results, 6.2 billion, up 6%, despite the fact that we have seen abnormally numerous weather conditions and disasters. So also here we have decided to pay out a slightly higher dividend to the tune of plus 6% for 1.34 euros. On a very solid basis, a very strong balance sheet as well. As you can see on this slide, our Solvency II ratio has reached 193%, fully aligned on our target range between 170 and 220. The strategy that we have begun to change and to make AXA closer to its clients, we are currently transforming the group in depth. If we now look at growth, I told you that growth is back, and I'm very proud that we are now able to boast of a plus 4% growth, which brings in 103 billion euros. And the growth is also carried forward by our target segments that include health, protection, and P&C commercial lines. So you have seen that as regards P&C commercial lines, we have here a result of plus 5%. This was clearly supported by a market climate that is propitious to this positive result. As regards protection and health, also we have interesting growth. AXA today is one of leaders among international leaders. We are very, very strong in healthcare, for example, and this position brings us a strong growth of plus 3% for protection, plus 7% for health. The major part of our growth comes from these segments, and I'm also very happy to say that today a large share of our business areas are found in these targeted segments. We still, of course, have a long road to travel down to transform the group fully. And this is why here we have, of course, sold down the AXA Equitable Holding Company in the US. And our activities will be focused on our target segments. This operating growth throughout the group is pulled forward by all of AXA's geographies. AXA is today one of the most diversified insurer worldwide. We are present on 10 markets. 80% of our results stem from these markets. And France and Europe in particular, that represent the 2/3 of AXA, have posted a growth of plus 10% in terms of results. But other geographies such as the US, Asia, as well as international markets have clearly contributed to this operating growth that stands at plus 6%. So here you can see that for the first time, the new AXA XL division, as I said earlier on, AXA XL was confronted in Q4 to abnormal natural disasters. To give you an idea, AXA XL in terms of natural weather disasters was equal to an annual occurrence of such violent weather events. And these were perfectly abnormal. If we look at AXA XL, because one of our priorities is the integration of AXA XL, I can tell you that we have made swift progress, and integration is ongoing favorably. What have we done until now? First of all, we needed to integrate AXA XL in our reinsurance teams. These risk teams have implemented a new reinsurance program based on the group's appetite for risk. Also, another important event was the renewal rates early on in January. We did our very best to coordinate this particular event, and also in France, in Europe, on international markets. We have here used all of the strength available to us to develop more opportunities and created by our enterprises themselves. Now, as regards our organizational issues, we are on the right track, particularly with our synergy. You heard last week that we announced our social partners slash unions to be able here to continue furthering integration. And now, the adaptation here in AXA XL. We are also on the straight line to integration for AXA XL. And we can see that this commercial momentum continues, and we have a growth in our gross revenues of plus 4%. We've also seen renewal on January 1 that was positive. And of course, the momentum between both organizations will be maintained, and we will therefore be able to build further on the reputation that AXA XL has in the eyes of its clients. So we here have an operating result that stands at 1.4 billion euros, and this has been reaffirmed in view of the fact that we now have acquired a normal experience at 4% as regards violent weather disasters. So we are currently integrating AXA XL, but I think that the transformation of the group itself goes much deeper than this. And we here have created the number one worldwide, including P&C commercial lines, which gives us a strong presence, and we intend to capitalize on this strength. At the same time, we have launched an increase in our AXA Tianping JV that will contribute 100% of the interests of this company in China. And there is here a vast opportunity in P&C, but also for health insurance in China that we intend to capture with this investment. Thirdly, we have also made strong progress in innovation in many countries, and this has taken different shapes. And in France, in particular, Jack and his team have invested in telemedicine. Telemedicine today is a component of the AXA France offer in group insurance programs. And this, of course, is quite differentiating versus other offers that can be found on the market. AXA France and AXA Assistance and our startup Care as well. So last year we announced two major strategic partnerships, one with Uber that is moving ahead nicely, with 1 billion travels protected for Uber, and on the other hand, a European partner with ING that is new, digital, and where we can bring in 13 million clients more. Now, the strengthening against financial risks has been maintained as well, and we have, of course, implemented this particular strategy after the crisis, and it is an acceleration that we started last year based on 3 different pillars. The first is truly how we here, of course, have listed our American business activities. You have seen that on May 28th, we triggered this IPO. We were able to come up with a secondary offer. And today, we are at close to 50% in minority interest holdings. And this, of course, is very interesting for the American market, but also in terms of operating results. Now, also transformation of our group insurance in Switzerland. We have modified this in life insurance, being the leader in Switzerland in this business context. And thirdly, we have announced the sale of AXA Life Europe. That was the European vehicle for variable annuities located in Ireland. And these three transactions are expected to bring in the financial means we need to fund the AXA XL purchase, but also to reduce our level of debt to this targeted corridor of 25 to 28%. Now, this transformation within AXA brings us here to say that we are facing a new AXA. A new AXA that is changing in terms of its business mix. After the financial crisis, AXA focused 80% on financial risks, i.e. life and savings business. And after all of these transformations that I've just described, but also via the divestment from the US in the life insurance business, and we have changed our profile to include healthcare, protection, and P&C commercial lines. Number one, as regards P&C insurance at global level, and a very wide international sector in terms of protection. And here you can see on the right-hand side of this graph that we have strongly reduced our sensitivity to financial risks. And as you can see on the slide again, the risks and the financial shocks are much more severe as concerns the impact they have on our Solvency II than are actually the natural weather disasters. Between 2008 and 2009, the shock in terms of Solvency II due to financial risks was, of course, at slightly lower than the natural disasters that stand at 46%. So also, we here have become a company that is fully entrenched in its territories. And we talk here of our efforts, the efforts we make every year, but in view of the situation in France, this year it is even more important to bring up the topic. AXA is very active in many areas, and certainly as regards climate change, you can see that we were very early on amongst the first to significantly reduce our investments in the coal industry. We will continue to pare this down. And climate change also is a link with a second subject that is very important for us. And this, of course, involves health protection via our nature, in fact, from the beginning of our history. and also as concerns inclusion, economic inclusion in particular. This, of course, is also a result of the Yellow Jackets in France, and we here have been there to support them, and particularly in the healthcare sector, in medically deserted areas of France. We here have done everything we could to use our telemedicine resources in favor of the French society at large. This is very important in our industry. Insurance is, by definition, a business based on data, but also on as concerns the responsible conduct in the use of these resources. Very important for our reputation, but also as concerns the trust our clients place in us. So for the third consecutive year, I would like to say that we here are amongst the top 5 of the Dow Jones Solvency Index, and it is up to us to maintain our position there. So if you look at the 2018 results, as covers our 2020 ambition program, we are on the right track to reach the objectives that we have set for ourselves, with earnings per share at plus 3%. And we are clearly in the range between 3 and 7%. As concerns available cash flow, we here have an accumulated growth rate between 38 and 22 billion, with the contribution of 6.6 billion in 2018. We're also on the right track here. The yield on our equity with 14.4% is also well placed in the 14 to 16% target that we have even increased on the road to reaching our 2020 ambition levels. And as I said, 193% concerning our Solvency II ratio, well located smack dab in the middle of the range that we had set for the company. So we here can confirm that we are going to be reaching our 2020 ambition targets. I'd now like to give the floor to Jacques de Peretti, who is going to present the excellent results of AXA France. Right. Good morning to all those of you that I still have not said hello to today. I have been asked to present the solid results of AXA France. As you know, we know how to work on our territory to transform our model, our profile. Also to make use of the expertise of our staff members, and we of course here can increase our profitability and our presence on the market. This is something that you can see on the 2018 numbers. And of course, our road is here based on the full commitment of our staff members and of our general agents. This is a growth of 3.5%, and we are going above 25 billion euros this year. And this is an activity that is growing. Thomas here presented the 3 priority segments. Health, that has grown by 12% at AXA France, protection up 5%, and the P&C commercial lines by 3%. So a targeted growth in the segments that we are targeting, and in parallel, an increase in our profitability. You can see it through our combined ratios. The three combined ratios of our three major divisions are improving quite clearly for the damages insurance. And I think this is a historical record, an improvement as well in health, which is of interest because despite more acquisition events, we are able to improve our combined ratio via new technical margins, and the same is true for P&C and protection. So as I do it every year, we were at 38%, meaning that 38% of individual savings are carried out within unit-linked accounts. I'm sorry, it's 39%. And when we compare ourselves to the market, we are 10 points above the market average, which is something that we owe the quality and performance levels of our products, as well as of the expertise of our staff members, endowed with the necessary resources that they need to be able to properly advise our clients, and also our selectivity as regards new business and new customer bases. So the growth in our revenue and improvement in our technical ratios, of course, leads us to an operational improvement by to the tune of 10%, and which is the outcome despite the violent weather events that have impacted France this year more than before. We nonetheless, thanks to the improvement of our technical margins, to the volume of commissions that we take on unit-linked, despite the drop in financial yields, we were nonetheless able to increase by over 140 million our operating results. So let us now look to the future. What are we targeting in our strategies? Of course, this involves 5 different pillars. The first is here the satisfaction of our clients. I've mentioned this already. The second one concerns what Thomas mentioned, our partner rather than a payer, in order to be able to enjoy what this new positioning has brought us. So we, of course, must pursue this transformation, and also we need to organize interactions with our clients. And this, of course, should not be something that is synonymous with many, many efforts, but rather something that is seamless for all concerned. And also our local implantation, our local geography, allows us to share our expertise with the largest number. And also, I would like to go into more detail as regards the role we play in our civil society. And in our tradition, I can even say this is in our DNA. Remember in 1991 when we have launched the union check to promote social debates in the enterprise and the group at large. And when after we have had seen that the youth in our suburban areas were a little bit overexcited. And also, AXA Hearts in Action today has 8,000 volunteers who support 150 associations every day. Today, we have strengthened our commitment to our civil society, and we are working with 6 companies to favor, promote, and strengthen our economy to be able to boast of an inclusive economy. All of the modest single-parent families, for example, can now benefit from a higher education scheme that will last until they reach the age of 26. Also, we know that every day one woman dies under the blows of her companion. And we have a team of legal experts who support these women in making sure that their rights are observed. And we also have a medical area to be able to welcome these women who are beaten by their companions. And also, we need to hire this year 200 high school students, and we will significantly increase the number of alternatives up to 1,800 young people that we are going to put back in the saddle, so to speak. And we will, in the weeks to come, we will organize an event in the Île-de-France area. And finally, something that is dear to our hearts, that is our core business, which is protection. This is before we intervene. We were on the roads, in healthcare, and we are, of course, here in fairly new segments. Cyber criminality that today is impacting the young is a real threat. And we have, over the past 4 years, implemented a partnership with the national police forces and so on to protect these children. And this year, we will give this young population its internet pass to protect them against cybercriminality. And we here are working on strengthening our presence amidst our civil society, because every day we realize that we must be more committed, not just as individuals, but also as large groups and businesses. Thank you for your attention, and now I give the floor to Gerald Harlan. Good morning. Good morning, all. So Jack talked about France. I am going to present the results of our other markets, beginning with Europe, which here stands at plus 10%, thanks to the improvement of technical margins. This was also the case in France, in Switzerland, in the UK, Germany, Spain. And we also here have a drop in tax rates, and these are offset by a negative impact of the obesity of our very low rates. But we here are posting a historical level at plus 10% in Europe. On the right-hand side of the slide, you can also see the improvement of the ratios, and particularly in health, improved by 1.3 points, and the growth, of course, here is at +3%. Asia, we have posted a growth of 5% in our underlying earnings, with more management commissions. You know that we work in unit linked in Hong Kong, and particularly thanks to the improvement of the markets and the hike in volumes, and also China. So on the right-hand side, you can see that we have gross revenues of +4%, with on our priority segments, strong growth, standing at +12% in protection on new business. And also 87%, this is a point that we had mentioned when we held our Investor Day in November. 87% of our clients are on our target segments. Now, AXA XL, as Thomas was saying, in Q4, we needed to face violent weather events. And XL, I need to remind you of the fact that we are now consolidating this during Q4. And we are consolidating Q4, whereas the activities of AXA Corporate Solutions is consolidated year-round. What you can see on the left-hand side is the normative contribution. If the number of natural disasters had been at their normal rate, we should here have been able to post 2.2 billion euros. Two major events, such as the forest fires in California and Hurricane Michael. So, in all, it means that the level of extraordinary, abnormal weather events have led to a minus 374 million, and to which we need to add the contribution of AXA Corporate Solutions at 0.1, and the contribution of AXA XL in our accounts and in our underlying earnings is at minus 2.02 billion. Now, also, this is due to a gross revenues of plus 10%, and we have grown by 5%, which is good news. Now, what is even more important is what you see on the bottom right-hand side. Market conditions are favorable when, of course, weather events are abnormally strong and violent. And you can see here on the right-hand side the good renewal rate early in January at plus 4% and a 1.5%. So in the U.S., we have a growth of plus 4%. This also due to commissions for unit-linked accounts. And in the U.S., as you know, interest rates are higher than in Europe. Some profile/model changes versus what we had last year represented plus 0.1. But these elements today are almost fully disappearing behind when in 2017 we were consolidating 100% in the US, and today we are at 81% in consolidation in the US. But this, of course, involves a contribution of 4% on the part of the US. So in the US, we have had a very strong Q2, And AB, our asset manager in the US, brought in plus 5% in gross revenue, and average management commissions in a world where fees are dropping here, they have increased by 0.5% basis points because we have added more products for individuals, for example, and less institutionals. Now, internationally, strong growth. We are very proud of the plus 28% on the international segment, with a growth everywhere, including Mexico, Turkey, Russia, AXA Bank Belgium as well. And you can see that there is strong improvement of the ratio in healthcare. Gross revenue are up by plus 5%. And let me remind you once again that health is an important share of our international business, because 88% on this segment is P&C, protection and health. AXA IM, to complete the review of our different markets, with here earnings at plus 3 billion, a drop in tax rates, and also in our Asian businesses. Of course, this is offset by a drop in management commission levels. And this here we also are witnessing not only plus 3 billion euros in growth, but also the growth of alternatives. And we here have acquired Quadrant Real Estate Advisors that we have purchased that involves AXA IM Real Estate, which brings in 3 billion assets in addition to those already reaped in. And we, of course, here would like to be now closer to the leader's position in Europe. Now, we are already way before our competitors in this area. So our assets are a specific resource that gives us something that is extremely solidly embedded in the growth of alternatives. Now, as far as the operating result is concerned, up plus 6%, with earnings per share up 3%. Well, you can say why 6 and why 3? Well, because this result is at constant scope, whereas you know that the dollar has dropped in 2018, and the growth of our result here is based on the constant scope of the exchange of the Forex. Then here, so our underlying, our adjusted earnings stand at plus 3%, and we have other distributions, payouts between 45 and 55% in the past. In November, during our investor day, we said that we were going to go into 50-60. And in fact, we are here. We are on target, 52%. So net income reaches 2,140,000,000. This is a drop in our net income that can be explained by purely accounting items. And for example here, the last line on this slide, and it is the overvaluation of the US that we have here amortized for 3,100,000,000. Also, let me remind you that in Switzerland, we have divested from the group pension savings schemes, and thereby we have tried to amortize the overvaluation, which explains the minus 400 odd that you can see in the third line here. And then, in fact, there are certain assets in the balance sheet that are marked to market. And you need to remember that during Q4 2018, we have had spreads on corporate bonds that were higher up. This is why we have a negative impact. Now, there is here also the cost of integration that represent minus 100 odd million, and particularly as concerns AXA XL sell down and AXA XL in China integration. Now, we here have 62 billion for due to mark-to-market events because the stock exchange rates have dropped over the year. Now, the Solvency II ratio remains very robust and in our range of 270, and here this is a very clear picture of our markets. And the Standard & Poor's, Moody's that had put us under negative watch have in fact restored our ratings as they stood before the acquisition of XL. And this, of course, was the consequences of our deleveraging plan that we described in Q4 last year. So here, general fund assets is 615 billion euros. You can see that this is essentially asset and liabilities here, our activity as an insurer. Of course, assets and liabilities are very important. And of course, we can only do this with bonds and rate-based products. And we have these products. And this is also very, very important as concerns the growth in our alternatives. And the rest is 6% in real estate, 3% in listed shares. And here you can see that these listed shares represent a relatively small share of the pie today, and particularly in the world of Solvency II. The investment policy of last year, 70 billion have been invested. You can see here the high quality of our investments, 28% double A and 57% in company assets that are rated A. And also between AA and single A, and we see here that some of these investments only represented 7%. Very high quality management, and we were able here to now give the floor back to Thomas Buell for his conclusion. Thank you, Gerald. In conclusion, 2018 was a decisive year. A year that saw AXA change in depth and also via a plus 6% result. This was created by a 4% growth level in our targeted segments that have contributed a record high for AXA. For 2019, we intend to continue along the same lines, and our priorities are extremely clear. First of all, the AXA XL integration must be maintained. We're going to continue as well investing in the field of innovation, and we will continue to divest from life business in the US that will help us drop our indebtedness levels. And we are here on the right road to be able to reach the target objectives of Ambition 2020. Once again, I would like to thank our clients, our partners, and our staff members and AXA agents who have all contributed to this very positive operating result. Thank you very much. Let us now move on to Q&A. So the time has come for you to ask us questions. We'll start over here. I'm sorry, the light is very, very vivid here. Florent de Lambilly, I have 4 questions. You're talking about the renewal rates on January 1. Concerning AXA XL, you were highly positive. What was this rate, and is it possible to compare it to last year's rates before AXA purchased XL? Also, for the P&C commercial lines, we can see that it increases by plus 3%, and on this slide there was minus 2%. So I wanted to know why you were removing the CLPs from the presentation. And also, as regards P&C for individuals and portfolio sizes, are you up in AXA France for individuals and for P&C insurance, commercial lines? And so 81% of insurance business. France is still at plus 50% as concerns savings. Are you going to be working on alleviating the load as concerns savings? Thank you very much. I think that most of these questions are for Jack. I'll answer the first, and I'll give a partial answer to question number 4. Jack, if you can take question 2, 3, and the second part of the 4th. So, as concerns renewal rates at XL, it goes along the lines of early 2018 because they have already had violent weather events. And this began in January 2018. This policy led us to increase our prices, and we've continued to work in this way this year. For example, to give you the results of this renewal rate campaign on January 1, 2019, for the primary insurance area, we have increased our prices on average by plus 4%. With a renewal rate of 90%. So this means that it was a very interesting result because it would have been tougher to increase prices in the aftermath of the events. As far as reinsurance is concerned, the increase in prices is less significant. We're talking 1 to 1.5% with a renewal rate that is also close to 90%. So in conclusion, strong renewals, strong implementations of price increases, and we are confident that this will remain the case throughout the year. Because we are highly focused on European geographies. And things in other European countries are more dispersed over the year. Now, for the 4th question, you have said that as concerns the 80%, we're talking about the total results of AXA. And this is why we said that we needed to desensitize our business from financial risks. The first is our sensitivity as regards our balance sheet, and also the contact with the end client. In the US in particular, we find ourselves in a situation where we give a lot of financial guarantees, but where we are very remote from the client, because these products can be sold by banking networks. And if you compare this to what happens in France, it's completely different. Jack demonstrated that our business mix contains many unit-linked accounts. It is a business that is much less sensitive to financial risks, excuse me. And also, the business in France is highly focused on the mass affluent segment, and with our agents having very intensive and close relationships with our agents on the French market. So we here have also the P&C commercial lines. Jacques, can you give us the answer to those questions? Sure. I'll try to give a little more detail to Thomas's response. Our renewal rate last year stood at 2.1%, and for individuals, it was slightly lower. So I'd like to take on the part of the question that you asked as regards 3% and 2%, minus 2%, that you probably have seen this already. So what happens, in fact, in the French P&C business? So globally, a hike in our net income of plus 3%, and this, it's a lifestyle product, and we needed here to cancel two huge contracts that did not correspond to our current quality standards. So, globally speaking, our net income, in fact, with the CLP activity, has led to an improvement of our combined ratio, and that stands at 0.6 base at 16.1, and our combined ratio for all financial years is 91.4%, meaning that everything we have implemented moves in the right direction. Now, you've also mentioned P&C for individuals. Quite clearly, we here are relinquishing a small share of our market share, and so we have relinquished 400,000, but we can see on the French market a battle amongst giants, where we look at the banking profitability to turn to the insurance sector, and the retail business is core. So during this Battle of Giants, we did not want to join in the price wars. And there is a new automobile product that will come out this year. And when we will have a consolidated at 93% our combined ratio, and then we will intend to return to this market because AXA in France is multiple product owners. Quite clearly, our life insurance is quite strong. Also, this means that we need to maintain our position closer to our clients in the future. In the middle. Yes, Jean-Luc, le pavé de l'assurance. I heard your ambitions. This means making the economy a more inclusive space via dividend that will increase by 6%, whereas your net income is divided by 3. And all of this in the yellow vest context. The basis for the result is also something that is aligned with our 6% numbers. Now, this is impacted by topics that are not structural, as Gerald had explained in detail. Yeah, the accounting value in the US has no impact on our cash flow. So this is, of course, associated with our underlying earnings. In the French context that you mentioned, this, of course, should be helpful to all of our stakeholders who are our shareholders as well. And today, our clients can choose other companies to work with. And Jack also mentioned that we here had made specific commitments in France. And the initiative here with this involves services for more modestly financially endowed populations. And in telemedicine, for example, for women, we have from the start always been very robust, very strong within our civil society via the actions in events that we organize. And Jack de Peretti mentioned Hearts in Action. And we have here volunteers, many people who have committed their time and energy to defend these particular contributions of the AXA Group. You have talked about the transformation of your company last year. We could say that you were fairly aggressive and you paid a fairly high price when we see the minus 66%. I suspect that the events of such amplitude should not be repeated this year. But more generally, is your cruising speed still high, or are you going to change your attitude and perhaps spend your cash flow? As I told you, we are engaged in the AXA transformation to strengthen our balance sheet against financial risks. The year 2018 was a restructuring year for AXA with the XL acquisition, but also with the increases of our investments in innovation. We will continue to work in this way. And as I said, the priorities 2018 are focused on the execution of our transformations, XL integration, maintenance of transformation via the XL integration to help us lower our level of debt. And these three priorities will remain the essence of our strategy. Any other questions? I have a question regarding the Brexit. I know that at AXA you have already tried to transfer assets from Ireland or into Ireland. Could you tell us what strategy you've chosen as concerns Brexit? And I have another question as regards the integration of Excel. Could you perhaps confirm that there may be downsizing of a number of people? And I have another question on climate change. Can you tell us more about how you are facing climate change and how do you assess the risks of climate change in the years to come? Well, thank you very much for these interesting questions. As concerns Brexit, we are impacted today in two ways. Local operations, where we have very important actions that are ongoing in the UK, and 5% of the group AXA positions. We are leader in the UK in health, number 2 in health, and also number 2 in P&C commercial lines. And we are prepared for local operations concerning Ireland and Great Britain per se. On the basis of a hard Brexit, we are locally prepared. And we want to very clearly maintain our local approach to the Great Britain market because it's strong for us. Also, internationally, we are prepared for a hard Brexit scenario. Of course, we saw international events based in London. And over the past 2 years, we have already moved people and brought people home, so to speak. And this simplifies our lives in view of the fact that we have a very strong European footprint, much more so than other insurers who do not play on the same continent. So we are totally focused on the hard Brexit scenario. The XL integration was announced last week, and our determination is to integrate both structures. This is done on the one hand in Europe, where we certainly in some countries such as France, Germany, Italy, etc., have structures that we need to integrate because our goal is to be highly coordinated and to work together. So this brings us to downsizing our HR. We announced this last week. We are now currently discussing this from a social standpoint. And as you know, AXA has a very reasonable and partnership-focused debate with what we call in France our social partners. So we also have to implement an active dialogue and to find the best solution to integrate both of these new companies. Now, as concerns climate change, if we look at this specifically, we realize, of course, that this is something that can't be done overnight. We have now seen 2 years of extremely violent weather events, and it is very clear. There's always the question, is it thanks to climate change? Today, we can't really be sure, but we are observing these events. And this year, we will need to be poised to see whether in 2019, 2018 will repeat itself, or whether this is a quote-unquote normal trend that we have seen appearing over the last 10 years. If we can see that this is indeed repeating, repetitive, if there is a change as regards the climate change risk, then we need to adapt how we are going to be able to face these risks. But it doesn't mean that we're going to reduce our business. There are many alternative capital funds on the market, pension funds as well, that are very interested in these risks. And in all cases, we will certainly work much more in this segment. At the time, XL was very active in the alternative capital, and we wanted to leverage XL's know-how throughout the AXA group so that all of us can benefit from it. Any other questions, ladies and gentlemen? Yes, over here. Christian Schubert, Frankfurt Allgemeine. Alors, do you have an absolute number? And can you tell us how high your debt level went last year? How high did it climb? And I know that you've been asked this question last year already, but seen today, have you paid XL a little bit too expensive a price? And also, as regards the calendar and AXA Equitable, do you still own 50%, or do you intend to remain there for a longer time, or when do you expect to reduce your minority interest levels? I am going to answer the second question, and Gerald will answer question 1, question 3. As concerns the debt level, which is your question here, we had 25% debt last year. We had announced in November that our indebtedness level would reach 32% at the end of 2018, and we are also aligned with what Thomas was saying earlier on, saying that our level of indebtedness should be between 28 and 30 odd percent. And of course, as concerns our cash flow, we always have a precautionary backdrop, and that is at 1 billion euros. And this we always have 1 to 2 billion in available cash flow. So much for the two questions that you asked. And the second question is the price of Excel. It's always hard to say whether it's too expensive or cheap. I think this is essentially based on comparative transactions. You see that we have paid a price of $15 billion on a standardized base at the time that stood at 1 billion. In other words, a price 15 times the standard. And you can see also the AIG and Validus transaction, or Hartford and Navigatia as well. You saw that the prices as concerns the multiples were much higher than 15 times. And 15 times we also need to justify this via the synergies this brings in. And we here have announced strong synergies on different scales. The first is diversification. And AXA, before Excel, was very strongly focused on the insurance matters in Europe. And the main risk was the European windstorm. With Excel, that is very strongly exposed in the US. And in 2020, we will be able to integrate Excel in our Solvency II model. Will involve a reduction in 2 billion, and this means that the purchase price is 13 times the price of the standard. And also as regards the cost reduction and the cost for reinsurance as well, and also the business that we can do together. And I think that if you look at the numbers that revolve around 500 million in all, this clearly justifies the price we've paid. Do you have any other questions in the room? Oh, AXA Equitable. Yeah. The calendar. Today, we are at close to 50% interest. Our determination is to divest completely and sell down that company. We have not given a specific date for the divestment. Because we would like to use the best time as regards market timing, but also as concerns the performance of the American company. You've seen that the AXA Equitable performance is perfectly acceptable. With the IPO, we have showed the investors an increase in profitability, and we need to find the right slot for the next session of the IPO. We're not in any hurry, and we'll take the right time for our shareholders. Any other questions in the room? If not, if there are any questions online. Are there questions online? Sorry, no microphone, no interpreting. The interpreter presents her apologies, but there is no microphone held by the person asking the question. Therefore, the interpreter cannot hear the question that is being asked. Okay. I am going to ask Gerald to please answer the first question as regards depreciation. And also we have our Italian expert as concerns business in Italy. And I'll take the third question as regards the potential tension with France. On your first question, and particularly on the question concerning depreciation, we here have decided to organize an IPO for our American subsidiary. And these overvalues are 20 years old today. Therefore, all of this cost approximately 3 billion. But it is just an accounting item. And when I say that it's an accounting item, when you look at our solvency, we have 193 solvency too, and it has absolutely no impact on our solvency. That remains very strong. So as you have seen in my presentation, the American subsidiary is doing a really great job. And we here have plus 4%. And remember, these plus 4% in view of the drop from 100% to 81%. And if we eliminated this difference, we would have been at 80%. And the American company is very, very healthy, very robust, and it's just a purely accounting operation. Italy and the activities in Italy. Microphone, please. Thank you. The activities in Italy are doing well. I must say that we have had an increase in net income 22%. And our banking business is doing well. We have been able to sell strong products on the market, and everything that we are seeing also this year gives us the impression that 2019 will be a good year. The income, the net income of the company is also positive, and we are well perceived by our clients and by our markets. The third question, of course, the tensions between France and Italy. But our insurance business is a long-term business focused on demographics and also on the needs of the Italians. Despite the fact that the political situation is slightly volatile, to say the least, the Italians remain constant. And today we have an opportunity in the health sector because here there is a strong need among Italians and the need to grow. And also, as regards P&C commercial lines, we can see there's a strong growth level, and we here have Massimo and Patrick Quinn, who are in Italy and who are focused on maintaining a very strong performance, despite the fact that the situation in Italy could be volatile. Now, Franco-Italian tensions are essentially focused on the European issues. what is the European road, particularly after the May 26 elections, and such as an actor as the AXA Group, it is in our interest to maintain the cohesion amongst European member states. And between the US and China, there is a European scope that remains faithful to the European values, and we are altogether responsible to find together the response and to also establish a dialogue, and between all countries. Any other questions in the room or elsewhere online? If it is not the case, thank you so much for your attention, for your questions, and I wish you a wonderful day.